This is Ndtv, and you're watching Ndtv Profit.
Wall Street moves into negative territory as investors eye a final deal between Greek political parties to get the second bailout. As the ECB may make key concessions over its holdings of Greek debts, German Parliament will vote next week on a bailout package for Greece. German exports fell 4.3% in December, the fastest rate in nearly 3 years on weaker demand from the Euro region. US media companies impressed. Walt Disney's quarterly profit grows faster than expected. Time Warner Two beats the street. And in an IT company, Cognizant posts strong fourth quarter earnings. It expects 2012 revenue at $7.5 billion, a 23% jump. Good evening, welcome to NASDAQ Live. This is the show where we get you all the updates from around the world. I am Anisha Nair-Dhawan, and with me is Vinita all the way from New York. Hi Vinita.
Hi Anisha, good evening everybody. I'm Vinita Singla here at the NASDAQ in New York City. Welcome to NASDAQ Live. Our restaurants at the market site today, Walt Clyde Frazier and Michael Weinstein rang the opening bell in honor of their new restaurant, Frazier's Wine and Dine.
Let's start with a look at how the U.S. markets are trading at this point in time. After opening with modest gains, the U.S. markets have now slipped into the red and are trading near the day's low. The Nasdaq at 2896, the S&P 500 1344, and the Dow Jones at 12,831. Marginally in the red, not too much of profit-taking, but still concerned on what happens when that final deal with Greece takes place, whether the political parties will come on board and whether a final deal can be struck with the EU and the IMF. But for now, let's now focus on earnings. IT major Cognizant came out with a strong set of fourth quarter earnings. Vinita has more details on that.
Well, Anisha, two very special guests with us today. Joining us are Francisco D'Souza, CEO at Cognizant Technology Solutions, and Gordon Coburn, Cognizant's President and COO. Cognizant's fourth quarter earnings beat street expectations by 2 cents at 84 cents a share. The IT services provider has beat estimates in at least the last 9 quarters. Cognizant grew more than 33% in fiscal year 2011, which is better than any of the Indian top 5. Good to have you with us.
Thank you. Great to be here.
Frank, the impressive numbers aside, how have you managed to keep the annual attrition rate at just 10%?
Thank you, Vinita. Great to be here. You know, we're very excited about the attrition rate that we saw in the fourth quarter. As you said, just about 10%, which is the lowest it's been in a long time at Cognizant. And we think that this is the result of a couple of things. First and foremost, it's the result of the fact that Cognizant is growing ahead of most of our competitors, all of our competitors. And what this allows us to do is create tremendous growth opportunities for our employees. Our employees look to us as a place where they can come, they enjoy working, and that they can grow their career. With the rapid growth of the company, we're able to give our associates around the world rapid career growth opportunities, and we promote people. We promoted more folks than virtually anybody else in the industry this year. The other thing that I think that our attrition rate reflects is the fact that over the last year and a half, we've really been focused as a company on building what we call an employee value proposition, really understanding how we as a company can create a 360-degree experience for our employees about their careers, about their long-term growth, about all of the aspects that constitute their relationship with the company, and we want that to be world-class at Cognizant. And so we're very happy that these two things coming together have resulted in industry-leading attrition.
And what role has your new management team played in helping you achieve that?
Yeah, as you know, Vinita, we announced this morning an expansion of our executive leadership team. We took 5 Cognizant veterans who have been with the company for a long period of time, who've played significant roles in the growth and the development of Cognizant to date, and we promoted them as a way to really expand the leadership bandwidth in the organization. Our business is becoming larger and more complicated, and we felt that this was appropriate and good timing to do that. We also felt that we didn't want to, as a company, fall into the trap of focusing all of our effort and attention on our current opportunity at the expense of investing and focusing on the long term. And so this new management structure that we've put in place will have a core group of executives focused on the core business, looking at all of the operating issues around the core business, like the attrition, but equally the short-term day-to-day running of the business, while some of us, myself included, will take our attention and focus on the longer-term growth opportunities in the business.
All right, thanks, Frank. Gordon, you projected a 33% growth year over year. Cognizant has grown a shade above that. Among the business verticals, which segment has contributed the most to the 2011 growth?
Thanks, Vanita. 2011 was an incredible year for us. We started the year thinking we'd grow 26%. We ended up growing more than 33%, driven largely by greater strength than we anticipated in discretionary development work, and we won a lot of that work. When I look by industry, retail and manufacturing did very well, healthcare did very well, and most importantly, financial services, which given everything you read in the paper, you would have thought would have done poorly, actually did quite well. So we saw strength across our industries. Really, our only area of disappointment was Europe. Obviously, Europe is still a very volatile economy. Typically, economic slowdowns are good for our business because it serves as a catalyst for clients to think how else do they want to use global delivery. That's what happened in North America and why North America did so well in 2011 and why we think it's going to do so well in 2012. Europe is still very much in that turmoil right now, so we think longer term it'll have the same benefits, but in 2011 it was softer than we expected, and North America more than made up for that.
So just to be clear, you think the trend is going to continue this year?
I think the trend of strength in North America, Europe being muted, and we'll have growth in Europe, it'll be muted, but we'll continue to have growth. Now, the big question for 2012 is, do we see continued strength in discretionary development? Our guidance that we gave today of 23% revenue growth makes two very important assumptions. It assumes that Europe stays muted all year, so our guidance does not assume a rebound in Europe, and it assumes that discretionary work is fairly modest. So we've been very conservative in our assumptions coming into the year and really focused on growth, primarily in North America, and strength in our application maintenance business, which we're already seeing.
And what do you see as the biggest driver in revenue going forward this year?
When I look at 2012, clearly it's going to be clients looking to outsource a broader range of services, going beyond the traditional maintenance work and development work into things such as business process outsourcing, IT infrastructure outsourcing, consulting. So the addressable market for Cognizant is growing very substantially. Even as IT budgets are flat to up just slightly, the opportunity for us is very strong, and that's why we guided to such healthy growth.
Great. And Frank, a large part of your revenue, about 18%, are from Europe, or is from Europe. Economic signs are weak for many European countries. I know you were based out of Europe, assessing the market there for 3 months. How are things looking for Cognizant in Europe?
You know, we see Europe as a strong, solid, long-term opportunity for Cognizant. We are very optimistic about the long-term prospects of our business in Europe because we think that the global delivery model in Europe, if you look across the UK and the continent, is relatively less penetrated. When we look at companies in Europe, we see that most of them haven't taken aggressive steps to move to a global delivery model in their IT organizations or in their operations organizations. So over the long run, we expect that Europe will be a great growth opportunity for Cognizant. When we look to the short term, clearly the economic volatility is having an impact on our customers in Europe and therefore by implication on us. We see that there's a shift going on in Europe with our clients. As they re-examine their discretionary spending, they're shifting more of their dollars into services from us that are more focused on cost containment. That shift of share from discretionary spending to more outsourcing kinds of services will take a quarter or two or longer to play out. And we think that during that period of time, we'll see some volatility in our results in Europe. But over the long term, we're very optimistic about the prospects of Europe.
And a big election year in the U.S. this year. Are there bound to be a lot of political considerations when it comes to outsourcing? How will that affect business at Cognizant?
You know, I think clearly given that it's an election year, outsourcing will be a topic of discussion. Our hope is that when looked at based on the facts of the argument, the facts will actually speak for themselves. So one of the things that's very important to understand is that while the current situation in the United States, we still have relatively high unemployment figures in the U.S. When you look at unemployment, for example, for folks in the U.S. with a college degree, that's just 4%. All of our clients are talking to us about the need to be more competitive. And we think that giving our clients access to the best talent in the world is a great way for our clients to become more competitive. And so as we think about the fundamentals, we think that low unemployment in the U.S. For folks with a college degree, coupled with the fact that our clients are becoming more technology intensive, makes a very strong and compelling case for U.S. competitiveness as a result of outsourcing.
And Gordon, what is the spending pattern among your clients?
It's coming in about where we expected. Overall IT budgets for our clients in North America are flat to up a little bit, which is exactly what we thought 3 months ago. Europe is a little bit softer. There we're seeing flat to down a little bit. But what's most important, our clients across the board are saying, even in the tight budget environment, they still have to get the work done. And the way they get the work done is to shift more work to the global delivery model. So the tight budgets can actually serve as a benefit to us. So good news is budget cycles are on time. They're essentially done now. And people are moving along, even in a difficult environment.
And are the clients spending for growth?
Absolutely, particularly in the United States. They are spending on things, mobility. They're spending on systems that can help generate revenue, because a lot of our clients, they've been cost-cutting for years. And yes, there's a little bit left that they can do, but they have to get their top lines growing again. And we're seeing them say, I need to invest for innovation and growth, but I have to do it within a constrained budget. How do I do that? I move more of my maintenance work to global delivery, and the discretionary innovation work that I'm going to do, I want to use companies like Cognizant so I can get more done for the same dollars. So I think we're a beneficiary of that. And one of the things we're optimistic about is in this economic cycle, people are making sure that they still keep dollars investing for growth.
Frank, NASSCOM has projected a guarded growth for the Indian IT sector between 11 and 14%. Cognizant and other large IT companies are projecting bullish growth. Why the discrepancy with NASSCOM's forecast?
I can speak to the Cognizant situation. We've, for years, focused our strategy on investing for growth. As you know, we maintain our non-GAAP operating margins within the target range of 19 to 20%, and we really reinvest everything above that back into the business for long-term growth. And you see that our growth rates translate a direct result of that strategy, because as we've invested for growth, as we continue to invest in new areas, those new areas are starting to pick up and generate above industry average growth. So the growth rates you're seeing at Cognizant, where we've consistently exceeded industry growth rates, and based on NASSCOM's numbers and our current guidance, are likely to do that again in 2012, that's a direct result of our strategy of reinvestment. This idea that we take everything above 19 to 20% non-GAAP and reinvest it back into the business for growth.
And are the budgets for the coming financial year back to pre-2008 levels?
Yeah, when we look at North America, we think that, we didn't see budgets significantly decline even through the 2008 downturn. They were modestly down, but they've, clearly recovered to pre-2008 levels at this point.
And what seems to be the main driver of budgets for the clients?
Well, our clients are clearly cautious, and, in any given year, our clients' budgets will depend on the outlook that they have for their business. So when clients feel optimistic about their growth prospects, their budgets tend to reflect that, and vice versa. But what's really important for us, and I think what's really important here, is not the absolute magnitude of clients' budgets. What's really important is this multi-year share shift that we've seen going on, where clients are taking increasing portions of their budget and moving those to a global delivery model. And that share shift continues. So while when we look to 2012, our view is that budgets will be flat with perhaps a slight upward bias in North America, the real issue is that the share shift that's going on within those budgets to a global delivery model continues. And that's really the fundamental driver of our opportunity.
And Gordon, in 2011, the rupee fell widely. Was the rupee's fall a chance for you to hedge strongly, or have you been cautious?
We've been hedging all along. I think at this point we probably have by far the most aggressive hedging program in the industry. We have over $3.5 billion in outstanding hedges through 2015 at an average rate of about 50 or so. So we feel good about that. It allows us to plan for the long term. What we don't want to have to do is watch what the rupee does day to day and make short-term decisions. As Frank said earlier, we're in this for the long term. We want to invest for the long term and make long-term plans. A very aggressive hedging program allows us to do that.
And are you expanding your business in India?
Yeah, we have built a team going after the Indian market. We've won some great accounts already, and we expect that to continue to expand. We view it as a very attractive market.
And the last question, Frank, has your acquisitions strategy changed at all? The target size that you were interested in was a maximum of $200 million. Are there any changes to that?
Largely, our acquisition strategy remains unchanged. As we as a company get bigger, our definition we've always said we do small tuck-under acquisitions. And as we get bigger, the definition of what constitutes small and tuck-under obviously increases as well. At this point, we're still comfortable with acquisitions of, companies of the size, revenue size about up to $200 million. Our sweet spot really is sort of in that 20 to 50, 60, $70 million range, sort of in there. Is where we think the sweet spot. We've been very, very happy with the performance of our acquisition program. We've done several small tuck-under acquisitions over the years, and each one has really played out well for us in terms of launching us into a new market, into a new service offering, into a new client base. And so we feel very, very good about our acquisition program, and we'll continue with that going forward. Well, we really appreciate you coming in and speaking with us here at Ndtv Profit. Thanks so much, Frank and Gordon. Thanks for having us. Frank, CEO at Cognizant, and Cognizant's President and COO, Gordon Coburn. Back to Anisha in India.
Thanks, Vanita. It's time we slip into a break at this point in time, but there's lots more lined up for you on the other side, including
This is NDTV, and you're watching NDTV Profit.